I think there's such a pent-up demand for gold. I think it's going to grow. I think when you get fear and love together moving on demand side, then gold can easily make new highs, especially with rates dropping. That now rates are starting to fall, gold can easily go to $3,000, $4,000. So we're going to, witness that the U.S. is going to continue this big spending, and they're going to need silver, and that money is going to be as being flown. You get big tax breaks if you build solar farms, and therefore you need silver. So I think that it's very, very bullish for silver stocks.
In the outlook for precious metals in 2024, FrankHolmes, CEO of U.S. Global Investors, is optimistic about the potential for gold to reach new all-time highs. Holmes attributes this bullish sentiment to falling interest rates and robust demand for the yellow metal. He envisions gold easily reaching the $3,000 to $4,000 range. Recent market movements reflect this positive outlook, with the gold price surging to a nearly three-week high of around $2,055. However, the momentum struggles to fully capitalize on this rise due to a modest uptick in the US dollar, as observed through the USD Index. Holmes extends this positive sentiment to silver stocks, emphasizing their favorable prospects driven by anticipated government spending and the growing need for silver in various industrial applications. A forecast by Metals Focus and the Silver Institute supports this view, predicting an 8% increase in industrial silver demand to a record 632 million ounces. The trend of central banks globally purchasing gold as a hedge against currency devaluation is underscored by Holmes. The World Gold Council's recent report confirms this trend, revealing that central banks significantly increased their gold reserves by 42 metric tons in October. Holmes also offers insights into economic conditions in Argentina, where a recent currency devaluation occurred. The cultural preference for gold and US dollars in response to currency instability is highlighted as a significant factor in the region. Further, the rise in the yuan's share of global payments from 1.9% in January to 3.6% in October is noteworthy. The People's Bank of China's strategic bilateral currency swaps with over 30 central banks, including Saudi Arabia and Argentina. Let's delve into key moments from FrankHolmes' interview with these video clips.
I suggested that I thought rates would peak. So the rising of interest rates and the fact that some of them hit 40-year highs put a dent on gold. But if you went back, I mentioned that gold would, if you really were so bearish on gold and you did the perfect inverse relationship, rates rising, gold falling, it suggested gold would fall to 1,500 or 1,400. It didn't. It actually held itself so well that now rates are starting to fall. Gold can easily go to $3,000, $4,000. So I think it's a suppressed, oppressed market that's extremely attractive. Psychologically, this is the year of the rabbit in Asia. Next year is the year of the dragon, the golden dragon. And we do know that rising GDP per capita in China or India means more gift giving, because I think the number is about 60% of gold demand is love. 40% is fear. And I've been recently writing about that. If China wants to get caught up to America in how much gold that's in Fort Knox relative to the dollar, they're going to have to buy 300% more gold than they own today to even get caught up. But they'll never be what the US dollar is, because it's not really, it's a two-tier system in China. People don't realize you can't use American Express, you can't use MasterCard or Visa. It's a very controlled society. You can't watch YouTube. It's really hard for people to realize. You mean you can't? No, it's not. It's a closed world. But they want to unrattle the US government by making their currency the biggest, most important. But I don't see it happening, but I do see they're going to try. And for them to try to get credibility, 7 years ago, Saudi Arabia told them that they have to own more gold behind their currency. So what are we seeing? More central banks around the world buying gold to protect against currency devaluations, etc. So I think I was in Argentina last month when the new president was elected. I was there on that weekend. And what has he done this week? He's devalued the currency 54%. Now, what's interesting in Argentina, the culture, is that they don't own gold. They own US dollars, and there's $250 billion stuffed in mattresses. But when you go to India, Indian women, they wear their gold, and they have 6 times the amount of gold that's in Fort Knox. So when we look at this sort of global picture, I think there's such a pent-up demand for gold. I think it's going to grow. I think when you get fear and love together moving on demand side, then gold can easily make new highs, especially with rates dropping.
FrankHolmes envisions a concurrent surge in silver, particularly highlighting the significance of a golden cross scenario, where the 50-day moving average surpasses the 200-day moving average. Silver prices demonstrated resilience in December, reaching above $24.5 per ounce. This uptrend was attributed to a weakened dollar and decreased yields, with recent U.S. data strengthening the belief that the Federal Reserve would initiate a rate-cutting cycle in March. Holmes underscores the industrial demand for silver, especially in renewable energy, notably solar energy. The continued emphasis on renewable energy policies in the United States is expected to propel the demand for silver in various industrial applications. Providing historical context, around 1990, industrial demand for silver constituted approximately 39% of the total demand, with the majority allocated for investment purposes. Fast forward to 2023, and the landscape has shifted significantly, with industrial demand accounting for over half of the total demand. The Silver Institute's report, titled Global Silver Industrial Demand Forecast to Achieve New High in 2023, highlights this transformation. Furthermore, the report predicts that demand for silver will surpass supply in 2023. This imbalance is primarily attributed to the projected record-high demand of 632 million ounces from industrial sources. The forecasted demand-supply gap underscores the dynamic forces shaping the silver market. Let's get back to the interview.
I think that silver gives you much more upside with a gold move for 2 reasons. One is as it's a warrant on gold, so the DNA of its volatility is always 50% more than gold on the upside and the downside. So as gold runs through and we get that golden cross, which hasn't happened, as the 50 days above the 200-day, we will see silver all of a sudden go through a new run. The U.S. continues to have a policy for renewable energy. The climate change group all met in Dubai and the United Emirates, and what you see in that is that push needs silver. You need silver for solar energy. So the industrial demand footprint is much bigger. What is really fascinating is that the cash silver market, that coin, trades at the biggest premium still. If you look at the futures market, it's the cheapest place to buy silver. But if you look at what really is going to buy a silver coin, it's much, much higher. That premium is substantially higher, basically signaling to you that the retail demand is buying silver coins. And I don't think inflation is going to go away. I think they're going to drop interest rates, but they're not going to try to go below 2% unless there is a financial global crisis. But I don't think so. And what your listeners have to realize, which was like a deja vu moment months ago, last time after we spoke, was how can the U.S. economy remain so strong? And what's come out is really that the U.S. is sending all this military equipment to Ukraine. But it's old stuff. It's old technology. It's very new for Ukraine, and it's able to show how good it is at battling and pushing back against Russia. But we're rearming everything to deal with China. And the great military industrial complex that President Eisenhower talked about is in every state. There is a military and company. And so you have to recognize as they're rebuilding the military machinery, military stocks have been growing at a 25% CAGR. They've been on a tear like semiconductors have been. Everyone focused on NVIDIA. Well, you take a look at the other semiconductors. They've had a 10-year run of 25% a year. Well, where's that going? That's going into a lot also into military and that new technology. Well, that's keeping the economy alive. That's why it hasn't fallen off a cliff, and all the debt spending. So we're going to, witness that the U.S. is going to continue this big spending, and they're going to need silver, and that money is going to be being flown. You get big tax breaks if you build solar farms, and therefore you need silver. So I think that it's very, very bullish for silver stocks.
Considering the potential rate-cutting cycle by the Federal Reserve in March, how do you foresee this impacting the precious metals market, especially in terms of investor sentiment and market dynamics? Lastly, with the anticipation of silver prices surpassing supply in 2023, what strategies or advice would you offer to investors looking to navigate the silver market and capitalize on these market dynamics? Share your thoughts in the comment section. If you liked the video, please subscribe to our channel and remember to activate notifications by hitting the bell icon. Your participation means a lot to us. Thank you.